we are at a stage where a significant part of the microfinance sector is the one that is based in Andhra Pradesh is in severe distress. So I want to begin by just briefly first summarizing that situation. The Andhra Pradesh government had introduced the ordinance on October 15th, and it subsequently became an act. Though the ordinance was well-intentioned, it was meant to protect the interests of borrowers, to ensure that there was no coercive practices in recovery, and to ensure that there was limits on lending. I think the unintended consequences of the Andhra Pradesh Act were not foreseen by anybody, and as a result, what we have is, after the tsunami, several nuclear disasters. So, though the Andhra Pradesh Act does not say anywhere that borrowers should not repay, but because of the competitive populist politics prevailing in the state, since nobody wanted to give the credit to the state government for having come out with a legislation which was protecting the interests of the poor against malpractices of certain sections of the microfinance institutions, the several opposition parties went to the people to say this ordinance is of no use. It's not even curbed interest rates, and it has only prevented them to come to your house for collecting repayments. But they can still, and even the High Court has said they can carry on business except for 2 or 3 restrictions. This is not enough relief. What you really needed was a loan waiver. And senior political leaders like Mr. Chandrababu Naidu, who was a very able chief minister of the same state just 10 years ago, went around from district to district saying that if any MFI staff come to the village, even to the panchayat, which is allowed under the ordinance, to the panchayat headquarters, that they be, the Telugu Desam activists be called and the MFI staff be locked up in a room till the activists come. And this, he said repeatedly, it's on record, it's on through this process. And similarly, many other opposition parties also did that. So there was a widespread campaign to basically convert what was an act to protect the interests of borrowers against certain malpractices into a widespread fomentation of mass default. And indeed, that is what it has become, to the point where nearly 7,200 crores worth of outstandings of microfinance institutions, of which nearly 6,000 crores is bank funding, has basically become, not just highly overdue, but now the chances of its getting recovered are very dim. This has also had an adverse effect on the other channel, which is a bigger channel in Andhra Pradesh, in fact, the bank SHG link. And it may increase because right now it is the peak agricultural season. There's a good Rabi season this year. There's been a lot of agricultural work. This is the peak NREGA season. But in April onwards, when neither agricultural work will be there nor NREGA works will be there, and the money that people have not repaid would have been pretty much consumed, the cash crunch for poor household will begin, and from May onwards, we will see a severe crisis of lack of even consumption credit, and so the consequences are quite horrible. Now, I accept the fact that this was not the intention of the government, but I think policymakers need to therefore be very, very careful to look at the unintended consequences of what they've done, and even now corrective action can be taken to restore advance. So I think it's only appropriate for a government to behave responsibly and not jeopardize bank funding, which is eventually depositor funding. And 10,000 crores worth of NPAs in the banking system is 1% of the total banking system's capital. It's not a small amount. And I think we need to hold the various policymakers through their acts of omission, as in case of RBI, and acts of commission, as in case of the Andhra Pradesh government, accountable for what they have done, apart from the fact that, this is destroyed, is very, very dim, and therefore it's a huge setback. And I think we need to go beyond just the acts of malfeasance by a few MFIs and look at what the total consequences of this are in terms of access by the poor to financial services in a sustainable manner. Politics. Then we need to take the total view, and we have to also go into issues of what is a sustainable cost of delivering credit to the poor. And in that, I just want to make one point, that if your cost of borrowing is about 13.5%, and if the cost of delivering the money, risk-free way, assuming there's no appraisal cost, you just send it by money order, it'll cost you 5%. If the borrower simply repays you 100% honestly by money order back to the MFI, another 5%. That's a Government of India transaction cost of 10%. The cost of 24%, which has been imposed today, is extremely difficult to achieve. It can be achieved only by those institutions which have somehow figured out a way of raising money from the capital markets at below 13%. Or we have to have banks to lend to MFIs at a lower cost if there is a subvention for that. On this regulatory, just conceptually, I think there are three parts to regulation that need to be looked at, and of that, two deal with how an institution deals with others, and one how an institution deals with itself. So the first part, how an institution deals with itself, is basically regulation related to governance. And I think the company law under which non-bank finance companies are established is the place where framework related to governance is established. And I think we have a fairly decent company law. It's being constantly improved. There's no need to improve it beyond that. Then comes, how does an institution deal with others? And the two others that matter in case of NBFC, MFIs, are those from whom it borrows and those from whom it lends, to whom it lends. Those from whom it borrows are essentially protected through prudential regulations, things like capital adequacy, risk concentration, adequate provisioning, transparency in accounts, all of that. And that is all very much in place. RBI regulations have been in place, and they are now almost compared to prudential regulations. But the third set of regulations, how we deal with our customers. And that is the consumer protection regulation. And on that, even the banking regulation is weak. There are thousands and thousands of bank customers who suffer. I was an IRDA member for 5 years, and you should look at the stories of how insurance companies treat their customers. Consumer protection is a problem in every sector in India. It's a problem in the financial sector in India, and it's therefore a problem in the microfinance sector in India.